What if I told you we're already in a depression and no one is allowed to say it? Your bills are rising, your savings are shrinking, your salary buys less every single month. Yet the system keeps telling you it's normal, that it's temporary, that you're imagining it. This documentary exposes the truth behind the silent depression, a collapse engineered in slow motion. And the part they'll never admit is simple. Someone is getting richer from this, and it's not you. For years, governments have repeated the same message. The economy is growing. Unemployment is low. Consumers are strong. But here's the truth you feel every time you buy groceries, pay rent, or check your bank account. None of it matches your life. If the economy is doing so well, why does it feel like you're falling behind? Why are millions living paycheck to paycheck in the richest countries on earth? Why are the basics, food, shelter, fuel, rising faster than incomes? This gap between official numbers and real life is the first sign of a silent depression, a downturn that doesn't show up in traditional data because the metrics were redesigned to hide it. GDP was adjusted, inflation was redefined, unemployment was reclassified, wages were reported without accounting for cost of living. Governments didn't fix the economy, they fixed the measurements. And while the charts looked healthier, the people got poorer. This is the part no headline ever explains. An economy can appear strong on paper while collapsing from within. And that collapse always begins with one thing. For generations, the middle class was the backbone of modern society. But since the early 1970s, something changed. Something economists rarely admit. Wages stopped growing, but the cost of living never stopped rising. This is the core of the silent depression, a slow, grinding erosion of purchasing power that stretches across decades. So slow, most people don't see it until it's too late. Here are the facts the system avoids. After adjusting for inflation, the median American worker earns less today than in 1978. Housing prices grew 8 times faster than wages. The average family needs 2 incomes just to survive, when 1 income used to be enough to thrive. The real cost of food has doubled since 2000. Healthcare inflation is 3 times normal inflation. Education costs rose 1,375% in 40 years. These aren't small numbers. These are collapse-level numbers. The economy didn't suddenly become more expensive. Your money became weaker. The middle class didn't decline. It was slowly engineered out of existence. Because when people are struggling, they become dependent on the system that impoverishes them. This is not a recession. This is not a downturn. This is a controlled decline of the middle class, hidden in plain sight. People say life just gets more expensive, but that's not true. It's not life that got more expensive. It's your currency that got weaker. Here's the part no one teaches. Your money is not losing value by accident. It is losing value by design. Since 1971, when the U.S. abandoned the gold standard, every dollar in your pocket became backed not by gold, but by debt. The system now runs like this. Governments borrow money. Central banks print money. New money enters the system. The value of every existing dollar falls. This is not a flaw. This is the mechanism. Because inflation does one thing extremely well, it transfers wealth from the public to the powerful. Every time prices rise, you lose. The government gains. The wealthy gain even more. Why? Because inflation reduces the value of your savings, but it reduces the value of their debt. For them, inflation is a discount. For you, it's a punishment. This is the core engine of the silent depression, A system that quietly steals the value of every dollar you earn. Here is the part most textbooks never explain. Inflation is not an accident. Inflation is policy. Governments need inflation because inflation is the only way to survive the debt they've created. The U.S. government owes over $34 trillion, and global debt exceeds $320 trillion. Here's the brutal truth. Governments can't pay this back. They can't default. That would destroy the system. So there's only one option: inflate the debt away. But to do that, they must sacrifice the purchasing power of the public. Inflation is not a glitch in the system. Inflation is the system. A system where your savings lose value, your wages fall behind, your debt becomes harder to pay, your lifestyle shrinks, and your dependence increases, all while the wealthy, holding assets that rise with inflation, get richer. That's why this is a silent depression. It doesn't look like 1929. There are no breadlines, no shuttered factories, no stock market crash that destroys fortunes overnight. Instead, it's the slow death of financial stability, disguised as normal. When people talk about printing money, they imagine physical bills. But the real printing isn't paper, it's debt. Credit cards, mortgages, government bonds, corporate loans, these aren't financial tools anymore. They are the money supply. Over 90% of all money in the world is created as debt. This is why the system needs you to stay poor. A population buried in debt is predictable. A population living paycheck to paycheck is controllable. A population without savings has no power to resist. Debt is no longer a financial product. Debt is a form of control. Here is the hidden mechanism. Wages stagnate, cost of living rises, people borrow to survive, debt expands the money supply, inflation rises, purchasing power falls, people borrow even more. Repeat. This cycle never ends because it was designed to never end. We are not in a recession. We are in a system where debt replaced prosperity. And this brings us to the next chapter. For decades, politicians and economists celebrated one number above all: productivity. They said it was rising. They said it was strong. They said it proved the economy was healthy. Here's what they didn't say. Productivity grew, but workers didn't benefit from it. From 1979 to today, productivity rose 76%. Worker pay rose 12%. Where did the rest go? Not to you, not to workers, not to the middle class. It went to CEOs, share buybacks, asset holders, corporations, financial markets, speculators. This is the foundation of the silent depression. Your output grew, your effort grew, your contribution grew, but your reward did not. The system took the gains and left you with the leftovers. This is not failure. It's a redistribution model engineered over decades. A system where workers create value and financial markets capture it. Today, everything costs more, yet everything feels cheaper. Why? Because the things that matter most lost their value. A college degree doesn't guarantee security. Home ownership is out of reach. Food quality declined. Savings accounts yield nothing. Medical care is unaffordable. Retirement is unrealistic. Job stability is gone. And the most important part, the value of your time collapsed. 40 years ago, 1 hour of work could buy more groceries, more gas, more square footage, more stability, more savings. Today, that same hour buys less of everything. This is how a silent depression works. There is no crash, no collapse, no sudden crisis, just the slow destruction of financial dignity, piece by piece, bill by bill, year by year, until one day you wake up and realize You're working harder, but living worse. In past depressions, people lost jobs. Today, people have jobs and are still poor. This is new poverty. You work full-time, you work hard, you work more than ever, and you still can't get ahead. This is not a personal failure. This is an engineered outcome. Here's the uncomfortable truth. Modern poverty isn't about unemployment. It's about under-reward. A system where rent grows faster than income, car loans last longer, food shrinks while prices rise, savings drain faster, debt replaces wages, side hustles become mandatory. This is why millions feel trapped. They aren't struggling. They're being squeezed, not by chance, not by misfortune, but by design. Why does no government admit there's a depression? Because doing so would cause market panic, bond sell-offs, bank runs, political collapse, loss of confidence. They can't say we are in a depression because the entire financial system depends on one thing: belief. Belief that the dollar is safe. Belief that the banks are stable. Belief that inflation is temporary. Belief that the economy is resilient. Belief that politicians are handling it. Here's the truth. Governments aren't managing the economy. They're managing perception. They don't solve crises, they rebrand them. Instead of depression, they say transition. Instead of stagflation, they say recovery. Instead of collapse, they say volatility. This is how a silent depression survives, not with solutions, but with semantics. A silent depression doesn't happen by accident. It happens because of decades of wage suppression, currency devaluation, aggressive money printing, trillions in unpayable debt, policy favoring corporations, globalization hollowing out industries, financialization replacing productivity, central banks distorting markets, asset bubbles replacing real growth. Each piece is deliberate. Each choice compounds the damage. Each policy widens the gap. And slowly, quietly, predictably, the middle class collapses while the elite consolidate power. This is the real story of the silent depression. Not a sudden crash, but a long decline, engineered to benefit the few while the many are left behind. The cost of living crisis didn't appear out of nowhere. It didn't just happen. It didn't come from a single war, pandemic, or supply chain issue. Those were accelerants, not causes. The real cause is deeper. The system now requires rising prices to survive. Here's how the trap works. Governments rely on inflation to shrink their real debt. Corporations raise prices faster than wages. Central banks raise interest rates to fight inflation. Higher rates make mortgages, loans, and credit more expensive. Households fall deeper into debt. Debt drives demand for more money printing. More money printing fuels more inflation. It's a feedback loop engineered to look normal. This is why groceries suddenly cost 30 to 50% more. One-bedroom apartments are unaffordable. Cars cost more used than new. Utilities rise every year. Insurance premiums explode. Childcare consumes incomes. Hidden fees eat into savings. The silent depression hides inside the most ordinary places. Your grocery bill, your rent, your insurance, your gas tank, your utilities. It's not one big collapse. It's 1,000 small cuts. Politicians brag when the stock market rises. They celebrate rising home prices. They claim it's proof the economy is strong. But rising asset prices don't mean prosperity. They mean the opposite. It means your currency is collapsing. When asset prices rise faster than wages, the rich get richer, the poor get poorer. The middle class gets wiped out. Asset inflation hides the silent depression. Here's the ugly truth. Homes didn't become more valuable. Your money lost value. Stocks didn't become more profitable. The dollar became weaker. The wealthy didn't become smarter. They just hold assets that rise when inflation rises. This is why the wealth gap exploded. The top 1% gained $15 trillion in the last decade. The bottom 50% gained nothing. Asset owners won. Wage earners lost. Because the system rewards those who own assets and punishes those who produce value. This isn't capitalism. This is financial feudalism. A silent depression doesn't only change nations, it changes empires. While the U.S. faces exploding debt, weakening currency, political division, declining productivity, rising inequality, global distrust, the world is quietly rearranging itself. China is buying gold at record rates. BRICS is building payment systems outside the dollar. Saudi Arabia ended the petrodollar era. Russia sells energy in yuan. India buys oil with rupees. Africa and Latin America shift toward multipolar trade. The global financial order built after World War II is showing cracks. For the first time in 80 years, the US dollar is facing real competition. And here's what history teaches. When an empire enters a silent depression, its currency becomes vulnerable. Its influence weakens. Its rivals grow bolder. This isn't the end of the dollar, but it is the beginning of a new world monetary map, and economic decline at home makes global decline inevitable. Most people expect the next collapse to look like 2008. Housing crash, Lehman moment, bank failures. But the next crisis won't start where people think. It will start in the shadows. The repo markets, the derivatives market, the treasury liquidity crisis, corporate debt markets, shadow banking, private credit, foreign bond outflows. These are the real fault lines. Why? Because today's financial system is held together by leverage, derivatives, fragile liquidity, artificial interest rates, foreign demand for U.S. debt, central bank backstops. If any one of these breaks, the system cascades instantly. The next crisis will begin quietly, in a place only traders watch, and then erupt into something no one can contain. Not because the system is weak, but because it is over-engineered to the point of fragility. This is the consequence of a silent depression. The system pretends to be stable, until one day it isn't. Here is the truth the system will never say aloud. We are living through a depression, not in sudden collapse, but in slow erosion. Wages down, purchasing power down, middle class shrinking, debt exploding, costs rising, savings collapsing, hope diminishing. This isn't temporary. This isn't a cycle. This isn't a normal correction. This is a long-term decline engineered through policy. A silent depression that robs the public quietly while enriching the few loudly. And the most dangerous part is simple. Most people won't realize what happened until it's already over. The economy doesn't collapse when people struggle. The economy collapses when people stop struggling. Because today's financial system doesn't run on prosperity. It runs on pressure. Think about it. Debt keeps you working. Inflation keeps you consuming. High prices keep you borrowing. Low wages keep you compliant. Lack of savings keeps you dependent. Economic fear keeps you from rebelling. A population under constant financial stress is a population that cannot fight back. This is why your financial pain is not a side effect. It is a feature. A controlled level of struggle is required to keep the modern system stable. You don't have to collapse completely. You just have to stay too busy to think, too stressed to resist, too tired to question, too indebted to stop working. This is the architecture of the silent depression, A system that doesn't need you to fail, only to never truly succeed. History never repeats perfectly, but it always rhymes. Every major empire followed the same pattern: rapid expansion, economic boom, rising inequality, currency debasement, debt explosion, public discontent, geopolitical confrontation, financial crisis, loss of global dominance. Rome, the Dutch Empire, the Spanish Empire, the British Empire, and now the American one. The warning signs are identical: inflation to high debt, decline in living standards, political polarization, failing trust in institutions, overstretched military, currency dilution, rising foreign challengers. The silent depression is not isolated. It is part of a global transition of power, a shift that only looks peaceful until the moment it isn't. The future won't be decided by governments. It will be decided by households. Those who understand the system, those who protect their purchasing power, those who adapt to the new economy. The next era will reward those who build skills, those who understand money, those who avoid debt traps, those who use inflation to their advantage, those who hold appreciating assets, those who see the collapse coming early. The silent depression will not treat everyone equally. Some will fall through the cracks. Others will rise through the chaos. The difference won't be luck. It will be awareness. Every generation faces a defining moment. This is ours. The silent depression is not a future scenario. It's not a forecast. It's not a warning. You are living in it. The only question left is, do you continue playing the game the system designed for you, or do you learn how the system actually works? Because one of those paths leads to survival, and the other leads to becoming another statistic in a crisis nobody will admit exists. Picture this: a dimly lit street, a man or woman walking home after a long day, carrying groceries that cost more than last week, gas tank half full, rent due in 5 days, savings almost gone, future uncertain. This isn't a crisis on a chart. This isn't a number in a headline. This is real life. This is the silent depression, a collapse not defined by banks failing, but by people failing to live the life they were promised. And the most dangerous depressions are the ones nobody sees until they're already inside them. Fade out. Before you go, don't leave without subscribing. Every week, we reveal stories about markets, power, and money that most people never hear. If you're watching content like this, you're already ahead of 99% of people. Subscribe now and join the people who actually understand what's happening behind the global economy. This is MoneyLore Insider, where finance meets mystery. Do you think this silent depression is intentional? Or is the system simply collapsing under its own weight? Tell me your answer below. I read every comment.